Good afternoon, everyone, or good morning, depending on the time zone you might be listening in from. Welcome back to another session of LendIt Fintech. I'm your host, Todd Anderson, Chief Product Officer at LendIt Fintech. We got another great session ahead of us today. First, just wanted to thank Alfie, Katie, the team at Onfido for their support, not only on this webinar, but their continued support over the years. Without sponsors and supporters like Onfido, we can't put on events like this and our larger scale events that we do for the fintech community. Second, if you're interested in any of the upcoming LendIt events, just head to lendit.com. Check out our upcoming USA event, our European Digital Banking Summit. We'll have more announcements for events later in the year. We have our LATAM event in December. So check out lendit.com. Not only the big events, but we have great features like the one we're doing here and other stuff on Clubhouse, all different types of venues. So check out lendit.com for the details on those. And third, to the audience, we want your participation. So don't be shy. If you hear something during the discussion, just go ahead and type that into the Q&A box. We'll go ahead and rope the questions in throughout the conversation. We'll also leave time towards the end as we move through the conversation to go ahead and answer those questions. So don't be shy, make sure you participate. And without further ado, let me go around the horn here and let everyone introduce themselves quickly for the session on real identity for the digital world. Alfie, I'll start with you, and then we'll go to Swaroop, Jerry, and Jessica. Alfie, kick it off.
Thank you, Todd. This is Alfie Lewis. I am the Vice President responsible for financial services at Onfido. And my role is to build practice around the financial institutions, banks, insurance companies, wealth advisors, relate our value proposition and ensure that we are relevant and fundamentally get the insights and the ahas. And I'm here to share some of those as well in this practice. Look forward to the session. Thank you, Todd.
Thank you, Swaroop.
Good morning, good afternoon, everyone. I'm Swaroop. I'm a Group Product Marketing Manager at Okta today. Just as a quick introduction, Okta is the leading identity and access management product for both enterprises as well as consumers. We help a lot of leading financial institutions such as Bank, Ally Bank, Northern Trust, and many more to manage their identity and authentication requirements for their consumer-facing applications. I'm happy to be here and nice chatting with everyone on the panel.
All right, thank you. Jessica, we'll go to you next.
Hi, everyone. I'm Jessica Jiang, and I am the head of capital markets at Square Financial Services, which is Square's newly opened bank. I've been at Square for a little over 5 years, and most of you probably know Square as the payment processing business, but we also have a lot of other products and services to help support our ecosystem of sellers. So we offer products to help them track their inventory or set up appointments or manage payroll. Capital is also a part of the Square ecosystem where we offer loans to the sellers processing on Square. My role is to fund the loans that we have facilitated. And to the end of last year, we facilitated over 8 billion. With Square Financial Services, we're looking to bring a lot of the lending capabilities in-house and be able to offer more financial products for our sellers.
All right, thank you, Jessica. And Jerry.
Yeah, I'm Jerry Pender. I'm the Chief Technology Officer for Credibly. We're a fintech company that specializes in small to mid-sized business financing. Been here about 3 years. We're having phenomenal growth, having a great time doing it, supporting the economy and the tough times here and the small businesses that are growing them. I have a background in investment banking, private equity, and I served for a few years as the Chief Information Officer of the FBI, where I ran the national law enforcement systems.
All right, thanks, Jerry, and welcome, panel. So first, I just want to kick off and go around to each of you to talk about some of the changes that you've seen, in the last year. Across financial services, we've seen all kinds of changes, not only to consumers, but small businesses. with the way they access financial services, the way they interact with financial services, and their expectations. So, Jessica, I'll kick it off with you. Just talk a little bit about what you've seen the last year, and how has Square also been impacted by what we've all seen since the pandemic has kind of uprooted our lives.
Yeah, first we learned that small businesses are very resilient and will pivot to help their businesses stay alive. We saw a lot of vertical integration and vertical expansion amongst our sellers, where they got very creative in how they meet their customers. So you have brick and mortar sellers who had to move online at the start of shelter in place. Then once retailers were able to safely open, they started to use things like Square appointments to help keep track of their customer visits and set up shopping appointments. So it became a very natural blend where you have retailers start using services like appointments and restaurants who can become a retailer or a grocer. And customer behavior has certainly been shifting away from cash into greater digitalization and online order. Countries like China has adopted QR codes and mobile wallets before the pandemic, but COVID has really accelerated these trends in the US. Square has published a number of reports in the last year on trends we saw in decline in cash usage and increase in cashless and contactless payments. I don't want to misquote anything, but if you're interested in these trends, I definitely recommend that you look up Square Range, where you'll see a series of reports that talks to a lot of the trends we've seen over the last year.
Alfie, I'll go to you next. As someone in a firm, Onfido, that works with a variety of different partners, what have you guys seen in the last year in terms of how people interact with financial services and some of the work that you guys do with the various partners you have?
Sure. I think what we're seeing, like anybody else you're gonna get from this panel, is massive growth in digital transactions. And certainly we're enjoying that in Onfido with over 100% growth year over year. And actually the number is a little bit bigger than that. And it's not just a US-based conversation, it's actually global conversation, which is unique in the sense that you grow in one region versus the other. But this time around, certainly a great reset, as McKinsey coined the phrase a few months back. Fundamentally, the challenge is, how do you establish that trust? Like, how do you start digital relationships with real trust? How do you know that you're dealing with the folks that claim to be who they are? And we genuinely believe that is kind of the beginning of the digital relationship. In the good old world, handshake was, or the eye contact was the original transaction starter. But in the digital world, we're seeing, the enterprise asking its customer, who are you? And can you prove you are who you are? And that's what Onfido does, matches your identity physically and digitally and send you the signal to prove it. So this is, we're seeing that movement towards a lot of digital transactions. But also we're seeing the consumer willingness to share a lot more data to handle that transaction. A few months back, you would ask the consumers to share information, especially in certain parts of the world. That was not an easy discussion for a consumer to share all sorts of data. Today, people are willing to share data in exchange for better experience. So the question is, how do you secure the transaction? How do you ensure that the transaction is relevant? While you're getting a bit more of data, how do you, in exchange, simplify and produce a different experience, a better experience? The third thing that we're also seeing as well is, I would kind of echo what Jessica said. Businesses are resilient and they're moving to digital, and we're seeing a lot of businesses as well kind of saying, how could we start digital journeys? How could we use your tools to acquire more customers, but also handle this whole authentication and authorization practices and sets. And I'm sure Jerry and Swaroop is going to talk to that as well. So identity management became the heart of the conversation, right? It's not just about the transaction itself. It's actually knowing the customer and ensuring that we're passing through the right customer for the right context is what we're seeing.
Jerry, what about things at Credibly, the firms that you work with, the partners that you work with? How have things been shifted? I'm sure you've seen some of the similar things that both Jessica and Alfie were talking about, but expand a little bit more about what it means for Credibly.
Yeah, we've always been an online service provider, so we've been very comfortable operating in that space. But the merchants and brokers have grown a lot more comfortable operating in that space as well. So, for example, we process bank statements as part of our underwriting process, and the merchants have become much more comfortable with figuring out how to go to their bank and download statements right from the banks and share them with us. So we're able to get information that's formatted and more reliable and not error prone. We're not getting screenshots from phones of bank statements and things like that, as the merchants have become more comfortable with doing it and more familiar with how to get it done. So it's really helped us out. At the beginning of the pandemic, we were processing 3 months of bank statements with each application, but through the course of it, we went to as much as 12 months. But by having better quality data and more automation around processing of that data, we're able to keep pace with the work.
And Swaroop, how about you and Okta? How have you seen the last year with the firm that you primarily work with?
Absolutely. I can't disagree with any of my peers on the panel here. We have seen the same trends in terms of digitization and adoption of digital services. But at Okta, when we sit as an identity provider for the entire enterprise across both customers and the employees, we've seen a number of broad macro trends. The first one is obviously rapid digitization, as a lot of my colleagues alluded to. And, historically financial services, what we see has been more conservative in their approaches towards adoption of pure digital services. So whether it's, fraud detection or KYC, AML kind of services, we've seen more and more digital products being adopted across the internal enterprise. But what we have seen also is two other pieces as well. That broad adoption has also required companies to rethink some of their processes. Traditionally, when you thought about the traditional, banking process or lending process, it involved a lot of in-person contact, and we have seen a lot of broad digital adoption, a lot more openness to adopt these sort of services. And finally, the third piece that is very important here is that we've seen the focus on the customer experience becoming more and more important. So we see a lot of lenders talk about not just digitizing the process, but also making the process as seamless as possible. So those are the four broad trends we have seen across the board.
Yeah, I want to dig into some of the and by the way, to the audience, if you have any questions, go ahead and type it into your Q&A box. We'll answer them as we move through the conversation. So don't be shy. Just throw any question you have in there, and we'll answer it through the conversation. I wanted to dig a little bit deeper into consumer and application behavior. If this one's more towards Alfie and Swaroop. What are the attitudes of consumers in terms of interacting and potentially spending when things get back a bit more normalized, getting back in person? And how did the two things of digital only and kind of forced into things, and then the option now exist, and what does that mean for consumers and kind of how they interact with a lot of these applications?
Sure, I'm happy to start, and Swaroop, I'm sure, is going to add quite a bit to it. We're seeing almost unanimously from every customer we're interacting with, the digital journeys are not just a nice to have anymore, as we said earlier. As a matter of fact, we're seeing a lot of conversation. I'm certainly part of a lot of conversations with banks to suggest that how do we start with digital first? So that's a huge conversation. Like, I've been in banking for for maybe 30 years now, that conversation would have been a dream, right? 10 years ago to say, how do we start digital first? So fundamentally, the shift has happened and banks are saying digital first. Will we ever go back to the branch? Certainly the branch is not going to go away. However, how do we optimize the branch, which is significant cost, significant effort, significant controls need to be put in place to manage? So what we're seeing and hearing is significant adoption of digital application, digital native functions. What does that mean for the technology companies is certainly, you need to be focusing on trust. You need to be focusing on optimizing the journeys. You need to be focusing on security. You need to be focusing on volumes of transactions that we did not anticipate. The world was 50-50 or 60-40, whatever the percentage was. The physical presence was very meaningful. Today, we don't know the magnitude of the transactions because obviously we're going to do a lot more of digital than we've done even in the past or even dreamt of doing. So the fundamental shift, in my opinion, is we're going to see organizational structure. We're going to see organizational behavior. And fundamentally, we're going to see customer-centric conversation versus product-centric conversation, right? So that's a serious shift in terms of technology usage and service offering usage. Echoing some of what Jessica said earlier, we're going to see a portfolio shift as well. So banks are going to deliver other services that rely on the digital native transaction. And I would argue that it's a great time, great opportunity. It's too bad that we've seen a bit of disastrous economical impact here and there, but I would argue that we're on the verge of massive economical growth, powered by real digital, built on real digital trust. And certainly Okta and Onfido working together with a lot of customers just to combine identity management and identity verification to empower those types of applications to kind of fuel the new digital economy.
Yeah, just to add to that, Alfie, some great points there. I think to add to that, I'll give you one customer story that I heard from one of my a regional bank in the Midwest. When I got ahead with the CISO and I was having a conversation with him, he did mention that, traditionally they were a regional bank with a few locations around Texas, but the pandemic had changed how they looked and acquired customers, even as a small credit union. He told the one thing that left a large impact for me was that he said that now the state of Texas is my customer base. I don't need to depend on anyone showing up to a branch to open an account. So that gives you a sense of how the pandemic has shifted traditional approaches, both from a customer point of view, but also from a business acquisition standpoint, right? But also, Alfie mentioned about, we need to make the bank work for you, right? And I think that is more true than ever now. We see a lot of focus upon, movements such as open banking that has really opened up the traditional banking approach to a more open model, has become more and more prominent as we speak today. Even though we don't have open banking as a concept in the States, companies are thinking about such approaches where they can offer services that are very unique and tailored to an individual's financial needs. And the way they're looking to do this is really looking to capture user data and serve them products that are very tailored to their own individual financial needs. We're seeing this across the board, across all different segments and across all different verticals. And, a key part about that question is making sure that, we protect the trust of the customer at all points of time, and also making sure that we're keeping whatever is secure inside of that user account at all points of time.
I wanted to shift a little bit to the other, main focus of a lot of the changing of the last year, and that's small businesses. It sounds easy on its face to say, all right, you shift to all digital, but Jessica, I'll start with you here. How difficult was it for a lot of small businesses, and being that Square Financial Services is a bank now? Clearly it couldn't have been that easy to just shift everything they do to digital, whether it be cashless transactions or, getting a website up and selling in more of an e-commerce way. Just talk a little bit about, how the change really was for small business, not only generally, but the small business process and how they interact with financial services.
Yeah, that's a good question. And I think that's where it becomes super important for companies like Square to be able to innovate quickly and accelerate some of the feature launches that we have to make it faster and easier for small businesses to move online. We offer many e-commerce tools for businesses where they can launch their online store for free. They can use our integrations to add payments to their existing website, or you can just create a payment link or a QR code and sell stuff on social media with no website at all. So I think, at Square, we really try to make it as easy as possible. Sellers can set up an online store in under a day, or if they want something quicker, they can set up a link or a QR code in a matter of minutes. So we, really try to offer tools for sellers to sell their goods and services, but also collect donations, sell gift cards, e-gift cards, membership subscriptions, and then offer features like curbside pickup or local delivery or staggered pickup times. Different things to help them efficiently, transition to, solve business needs during the pandemic. We also offer different forms of contactless commerce where sellers can set up invoices to bill their customers remotely, or have socially distanced hardware where tap is enabled. And we try to make it easy not only for our sellers, but also our sellers' customers. So we have it so that they don't have to set up a separate account or download a separate app, but rather just make payments and go to checkouts, go straight to checkout with no hassle.
And Jerry, what about some of the firms that that you guys lend to and that you work with? What are some of the challenges they've faced in the last year in terms of the pandemic and shifting a lot of the way that they interact with their customers, and then ultimately how you interact with them and provide the capital needs and other things that you do to the businesses that you serve?
Yeah, I think one of the things that has surprised us the most is that there were clear winners and losers, across the board. But it was varied, and we saw maybe areas of the country or industries that you might have thought would be really hard hit, but we saw successful businesses in California tourism related industries. We saw successful businesses as restaurants in New York. And other areas that you might have thought would be good from the pandemic, would benefit from it, a medical or IT company. We saw companies that really had problems going through that. So we think it was based mostly on how well they were able to adapt and how quickly they were able to adapt. And so the challenge for us was, as we do so much with automation and with our machine learning models, that the situation really changed overnight. So the models became outdated, and what we were able to do was take our unique mix. We have both manual and automated processes, and we're able to increase the amount of manual work and exception handling and judgment that we put into, so that throughout the pandemic there was actually not a single day that we didn't complete financings for businesses in order to support them to keep them operating in this difficult time.
And this is a more broadly a question for the group, but how much of a learning curve was it for some of these, not only small businesses, but ultimately these companies, to make this shift, like many of you have pointed out, almost overnight? Are we talking about weeks, months? This is just kind of a slow ramp up, because I assume not all could just go, all right, the light switches, now we're in all digital. I mean, there's got to be a bit of a runway and a bit of a learning curve.
I guess from Onfido's point of view, we saw, I want to say ours, right? Immediately the volumes have scaled up exponentially. Literally in, March last year, April last year, things just ramped up. And certainly I can tell you about the cryptocurrency world last few months also saw exponential. Exponential is not even a number, right? This is like huge, massive growth in terms of transaction. Everybody wants to onboard into the new digital world. So I would argue that businesses started to ramp up very quickly, realizing that we're going to stay home for a bit and we're going to go do digital quite fast. And certainly, certain places, I would echo what Jerry said. Certain places we expected a bit of a faster, more dynamic reaction. We're not as what's the word? We're not as dynamic as we expected them to be. And some areas were genuinely extremely dynamic, and we saw the massive growth quite visible.
Yeah, I can add to that. I think, surprisingly, what we saw as a company has been actually the industry is more nimbler than we thought they are. I think maybe it's a function of, where we are from a technology standpoint. We saw broad deployment of technology solutions in a very quick manner. Whether it's both internal driven, or whether it's internal processes or internal enablement, so that, these as small businesses can adopt, or whether it's their applications and digitization of their applications, right? I think we've seen quite a bit of nimbleness that has primarily surprised us, whether it's, quickly using existing platforms to quickly build out their digital service. That's been a trend we've seen extensively, but also using existing services to quickly add identity or add authentication. It's been a very quick process. So I would probably, my takeaway is that surprisingly nimbler than we expected.
Yeah, I would say that at the onset of shelter in place, we saw, between last March and last April, a dramatic increase in sellers going cashless. And then over time, it normalized a bit. But I think over the last year, we saw that 45% of our sellers in the US were accepting online payments versus 30% a year ago. Or we saw that close to 75% of our US sellers were accepting contactless payment versus 65% a year ago. So definitely see trends increase much quicker than it would happen without the pandemic.
And these are not things that are going back anytime soon. I mean, it's this acceleration, has jumped, and now it's here. And now it's a matter of other businesses who have not yet there slowly adopting these things over time. I wanted to move to, I know a few of you have mentioned it in terms of establishing trust. So what are some of the necessary frameworks between financial services providers and their users to ensure that trust, especially potentially with some firms that have never really been all digital or been that digital? How does establishing that trust work? And I'll go to Swaroop on this one first, and then we'll have Jessica chime in.
Absolutely. I think from our perspective, from a digitization perspective, we answer trust in a number of unique ways. The biggest question that, we work together with Onfido particularly here is, how do we identify someone who's the client of a financial services provider uniquely and accurately, so that financial crimes or fraud is, accurately identified and blocked. So for us, from a trust perspective, that is the first basic building block. Can we identify someone in the general population, and can we serve that up to the business that they can, build off? The second piece of trust is about the continuity aspect of trust. That can we, once someone has onboarded into a digital platform, into a particular financial service, can we continue to protect and trust that user on an ongoing basis? We've seen, for us, for example, the risk of, things like, account takeover fraud, or, just fraudulent synthetic identity fraud being a big concern for financial institutions. So companies actively mitigate against those types of fraudulent concerns that they might have. So that's what we see from a fraud perspective. And it's been something that continues to be a big challenge in the wake of the rapid digitization that we have seen.
Jessica, before you chime in, I just want to remind the audience, if you have any questions, please go ahead and use your Q&A box. And Jessica, to add on to the trust question, just generally, do you think fintechs have a higher bar of trust they need to get to versus banks, for example, with potential clients that you work with?
Yeah, I do. I mean, with something like banking, people are just traditionally more inclined to go to a brick and mortar bank versus use something online. But I do think that there are shifts in that trend as well. I mean, 2020 was a really tough year for everyone, especially for small businesses. And our sellers really value trust and speed. We build trust through transparent and fair pricing. At the onset of COVID last April and March, we waived subscription fees and allowed sellers to pause on SaaS fees even after that. Communication with sellers was, extremely crucial. There was a lot of uncertainty out there, and so we launched a lot of resource guides and provide forums for sellers to share advice and stories with each other. I mentioned earlier that we accelerated some product features, but I think one of the things that we were the most proud of is how quickly we launched PPP and helped our sellers get access to government funds. PPP is a great example of how small businesses were underserved by traditional financial institutions, right? In the first round of PPP, funds were largely earmarked by large banks for their larger customers, and that left a lot of the mom and pops and the community small sellers, micro sellers, underserved. Once we launched PPP, we heard a lot of really positive feedback from our sellers. They really, enjoyed the experience we helped build. We pre-filled a lot of the application for them based on the data that we have, making it very easy for them. And we were there for them when the traditional banks weren't. That helped build trust. So I think, given recent experience, a lot of businesses that were maybe less open and less inclined to bank with non-traditional banks have likely changed their views.
I would also like to add, one of the challenges that the digital world presents today is I could carry a virtual identity. I'm dealing with this particular institution, and I could be alfie.lewis@gmail.com. But I turn around, I have a different personality when I go to Square, and I would be alfie.lewis@xyz.com. So I could carry multi-personalities. By definition, that is stating some form of not common, I'm not presenting myself accurately, and I have to prove myself over and over and over again. So it's creating a form of distrust out there, right? I've heard it from major banks. How do we know that these people are really presenting themselves accurately? So part of what we do at Onfido is verify your identity and you're real, and we check your behavior. You move your head, we know that you're still alive and exist, and so on and so forth. But it also raises a significant need for a portable identity. Wouldn't it be nice that I would go around and present myself like I present myself in the physical world? I am who I am, I show you an ID, and I could not turn around and I show you another form of ID that changes anything. So we're seeing a bit of conversation. I don't know if anybody has carried this or created this unified digital identity that I could use portably across platforms as a consumer, as a provider, as a moderator, as a transmitter, as whatever, right? So we're seeing this whole notion of, wouldn't it be nice to establish that greater, deeper trust with the individuals that we're dealing with. Obviously, it's a bigger topic than this discussion, but fundamentally, that's what we're seeing the future kind of imposing on us. How do we ensure that we are carrying our digital identity across platforms, across transactions, across globe, with the same identity that we truly hold?
And ultimately, the person or the business would be in control of that identity than giving access to financial services, because now it feels as if the financial services firms are the ones that kind of hold the keys. They're the ones that have the data. There's the one that, all right, this is your credit score, this is your risk according to our organization, whatever bank or non-bank it might be. But in the ideal world, we'd have our identity and then we'd open up access to it, to the institution, okay, and then we'd shut off access, lend me the money based upon the risk profile that I have. Is that the type of future that you're, I obviously we're not there yet, but that's kind of the path that we want to sort it towards, move towards.
I think banks would love to say that. At least bankers are telling us we are the single source of truth. But if you're dealing with the government, as we're dealing with the government of Faroes Island, little tiny island in the Arctic North, they're saying no, government is the single source of truth, and everybody else should facilitate. Actually, we're talking to the Estonia government as well in the same topic, and they're saying no, government should be the single source of truth. So I eventually,
and you have that push and pull with government and people that don't want the government necessarily to have their data as well.
But think about what we do today. I am who I am because some sort of a government issued me a birth certificate and a driver's license,
security card,
and a passport and a social security. So for that purpose, I think government is prevailing today. But I honestly think the financial institutions are going to have some sort of control as to how this digital identity is going to be formed. But you could also argue that you and I will have some form of control as well. I give consent if I open my wallet and show you my card. I have some sort of control.
Yeah.
I chose not to show it to you. In the digital world, God knows, right?
I did want to sure, go ahead.
Just to add to that, I think the PPP example that Jessica pointed out, it's a great story. We with the rapid deployment of the PPP program, a lot of financial institutions came to us saying that, hey, can customers bring their existing trusted established identity into my loan application process from whatever bank they do, to kind of speed up the onboarding process or the application process. That is one example where established trust with one bank, and there was a real need for portability of that identity across different institutions they were applying for a loan with. The other one piece I love to say here is the model that I particularly recommend is the open banking approach, where you can take an existing identity and use that identity across different vendors. So the trust that you've already established as a stepping stone can be taken across the board. I know from a government's point of view that Alfie mentioned, Europe is a particularly interesting example. I know he's mentioned Estonia and the Faroe Islands, but I think Sweden, particularly with their bank ID, Norway similarly, Netherlands also, I think Switzerland also, they have they're taking a more government-driven centric approach to trust and identity and say that, hey, take this trusted established identity that's been signed digitally and use that to establish your bank account. And then in the US, I predict it's going to be largely driven by organizational identity. So, we're going to have islands of identity set up by financial institutions.
Fair.
We found it very important to communicate with our customers, very similar to what Jessica was saying. We had extended financing to many businesses, and they were having, clearly in March, April last year, very difficult financial times for them. So they certainly, by and large, had a willingness to repay us, but not the ability to. So establishing good communications with them, responding to their questions, and they were very willing to share data with us, so we could support them and get them through.
I did want to bring up, a few of you have mentioned it a little bit so far, and that is fraud. And so clearly with all the shift to digital and the new normal that we're in, how, I guess, important is it to ensure that the customer is protected, you're protected, your partner's protected? I mean, clearly with this, fraudsters are also innovating. And so how do we ensure that, some of the stuff that we do to protect the organizations also doesn't, build in too much friction and hurt too many of the good people? Because, ultimately you don't want to create too much friction where someone says, all right, this is too much of a leap, I'm not going to go here, I can go over here, when the friction's a little bit easier. So, Jerry, I'd like to get your thoughts, and then we can go around on a little bit of the fraud issues, and what that means for the firms that you work with, the partners that you work with so much more volume digitally than ever before.
Yeah, you just have to be able to adapt quickly as things have become more electronic. There's more opportunities to correlate data and cross-check and look for different types of telltale signs in digital documentation. We can connect directly to the providers, and it's been very positive in terms of our ability to do that. And as you're saying, it's important that you don't do too many false positives. You got to be accurate in what you're doing, and that's been important.
Alfie, Swaroop, I mean, Alfie, you guys are experts on the identity and anti-fraud. Kind of curious hearing your thoughts on the increase of fraud and now that we're living in a more digital world than we've ever lived in before.
I genuinely don't have a specific practical point of view, because we at Onfido, and in my previous experience with PwC and others, we don't necessarily interact on I personally don't interact on the fraud front. I made sure that the fort is secured. When I get you in, you are a real person. You are qualified to do business with me. I have verified you, validate you, authenticated you, got you in. Our rejection rate has not increased in general. However, there is a tendency to eliminate fraud if you know that you're going to go through that rigor. So, the analysts are suggesting that the fraud has been significantly reduced digitally because the mechanisms are so stronger, much powerful, and more efficient, better than any human qualification. I look at IDs and I can fool you. Actually, we have data to prove that if I look at certain IDs with certain biases, I could actually let through some fraudsters, if you wish. But technology allowed us to kind of, A, predict, 2, examine, 3, pass through the right folks to go in. So I'm sure fraudsters are not really going to stop, but what I'm suggesting is technology has eliminated quite a bit of that, and we're not an indication of how is the world operating today under the new COVID circumstances, unless Swaroop has a different discussion, different point of view.
As in from our perspective, with COVID and the rapid digitization, we've seen 2 broad fraud trends, and particularly these have been impacting financial fintechs and financial services pretty extensively. I think the first type of threat we see, and especially where we work very closely with our partners at Onfido, has been identity fraud, particularly synthetic identity fraud. That's been a major issue, with the exfiltration of PII data being more broadly available and accessible to attackers. This has been an area that businesses have been looking for active mitigation. This is not just purely from an identity establishment point of view, but also many times these attackers are really, really sneaky. They look at credential reset and recovery, or calling up the call center to reset and recover a credential. They look at all the weakest links and they look to establish and take over an existing account. The other area we see a lot of a growth of identity-driven attacks has been account compromise. We think of this primarily because of the 2 things. The cost of doing fraud has been going down with more and more digital services available, fraudsters can fairly automate the process. And the second piece has been that user behavior has been that users have been sharing credentials across the board. So a lot of the credentials are available in places like the dark web. Attackers can take these credentials and replay that. So these are the big broad trends we have seen as an identity provider at Okta.
Yeah, I mean, honestly, digital onboarding isn't necessarily new, right? At Square, we've been doing it for many years pre-pandemic. Our sellers have been onboarding by themselves for years now, and 90% of our sellers are self-onboarded with no sales contact, and over 99% of them are approved. On the lending side, fortunately, fraud is less of an issue because you can't apply for our loans. We monitor your sales. You've already been processing on Square for a period of time. And we use the data that we see from the payment processing side to make a credit decision.
I'm curious too, with all the shifts of the past year, how do you ensure that some of the most vulnerable aren't necessarily left behind? There's obviously always been an access issue with certain areas of the population, and with such a rapid change, how do you ensure that those segments of the population, whether they be certain businesses or consumers, that they're also included and that they're part of this digital wave as well, and making sure that they have access to the tools that can then help them, not get left behind. And that's open to anyone on the panel.
Yeah, I think it's again on us to serve these type of sellers, right? Square's mission has always been economic empowerment. You see it with our everyday lending business, where our average loan size is in the $7,000 range versus like 250 plus thousand at a bank. Even for PPP, I think the average size of the first and second round of PPP loans are in excess of 100,000. Ours was 10, right? So I think you just keep the access open and make it as easy as possible for the smallest sellers, the mom and pops, to be able to self-serve and keep the access open and not turn them away to serve the larger sellers.
I would argue that we have been pushing for better experience quite a bit, right? We're seeing, if I can give you a better, more digital experience, efficient, better experience is the way to go to enable the businesses to do what they need to do and the consumers to onboard. And that's kind of the theme, and that's why we're growing at the rate that we're enjoying right now. The other thing, of course, economics are everything. Of course, if you can do everything manually, but we can do it better, faster, cheaper. So the economics play a major role. The third element that kind of drive us all, what else could we do? So the innovative part of it, right? If I can get you in, if I can onboard you in, wouldn't it be nice to do other things in a much more efficient way, in a much faster way? And certainly, can I give you better services? If I know my customer better, wouldn't I offer him a lot more in-depth services? So it's what goes beyond just the onboarding is what we're aiming for.
I did want to highlight a question from the audience. Alfie was answering a little bit from it there. With the growth of digital in the past year, have lenders and other fintechs increased friction in the onboarding process? How do panelists think about the balance between adding friction versus a better customer experience? Alfie has provided some thoughts there. Anybody else want to give some thoughts on that one? This is an audience question.
I can add. Go ahead, Jessica. Go ahead.
I think this is where it's great to have a platform that is very sticky, where sellers are, they're already someone you have a lot of the information, right? We try to make it as seamless of an experience as possible for them to pre-populate a lot of things. Only, you know, if you're a repeat customer, you don't have to ask as many of the questions. I mean, our loan process is a 3-click process. I think it's super, super important to have, you know, it be a simple and fast experience. Everyone's really busy. So the more information you already have and the more you can pre-populate a lot of the fields, the better.
I think from my perspective, also thinking about the process, you know, obviously like bringing existing trusted data attributes into the onboarding process is very, very critical. But also thinking about the process you implement relative to the business you are is very critical. You know, for example, ID proofing to the onboarding process depending on the type of business, the level of verification you need to have will change. We'll see that, you know, some businesses can afford to have you know, a heavy-handed approach to this, and some businesses, you know, especially sensitive businesses, think of like the mortgage or the lending industry, where I'm there quickly to establish my identity and check the rates available in the market. A very user-driven, a very low-friction approach might be good to start off with, and as you complete the lending process, having a more higher friction approach might be more appropriate. So being very thoughtful about the process and the friction it introduces to your customers is something that has become very critical in the year gone by.
One of the things that we've deployed in the last year is our new offer calculators. So when we send out a finance offer, we allow the merchant or the broker to adjust the exact terms, the amount of the advance, the term, the types of products that they get, the payment frequency, and those kinds of things. And by them being able to do it themselves in an interactive way, it's helped them to be more efficient and not have to go back and forth in emails and phone calls to us.
I mean, it sounds like, you know, at least from your experiences, that, you know, we've certainly entered the age of kind of self-service financial services on both the consumer and small business side. And, you know, I think the fintech angle has certainly proved, you know, their worth and business model through the pandemic in being agile, self-service, and a lot more adaptable than, say, a traditional financial institution would be in this environment. Would that be a fair characterization of the last year?
But I would argue, Todd, that we're really getting extremely positive interaction level with traditional financial institutions. To how do I get this KYC onboarding exercise faster, real digital? Surprisingly quite positive for us, quite positive. I'm sure that's causing the financial institution to reconsider quite a few processes. As Swaroop said, they're redesigning the processes for sure. But I think the short answer is, I think financial institutions are realizing it's here to stay. This is the new world. We're not going back to the good old world.
No way. We have just a few minutes left. You know, I did have you know, a question here I wanted to get your thoughts on. Jerry, I'll start with you. Is there a technology that has helped you most over the past 12 months, or that you're most excited about in the future? I mean, there's lots of buzzwords in fintech and financial services we hear about, you know, whether it be AI, blockchain. Is there one thing specific that, you know, kind of excites you most?
Well, one of the things that's benefited us the most over the last year is our bank statement parsing, whereas we used to do things in a manual way. We're able to automate a lot of that. It hits on some of the questions that we've talked about previously, to detect fraud, make things move quicker, make it more frictionless and a lot faster for our merchants. So that's been probably the biggest technology win we've had in the last year.
Anybody else technology out there that you think is most exciting?
Well, beyond Onfido, there's no other technology. No, I'm just No, certainly the digital native is just digital native transactions, banking, financial services is very exciting to a person like me and a lot of us. So it's COVID really delivered great results for folks like me who've promoted the digital all the way for a long time.
Yeah, I mean, technology's enabled us to do a lot of things to empower our sellers. I mean, offering loans without an application, right, is something that's incredible. Offering embedded loyalty, marketing based on consumer data. So, you know, our sellers don't have to think about it. We know who their customer set is and we can help them market out. We can help them track inventory across multiple channels, whether it's in person or web or social media, right? Like, so I think technology has definitely been a key player for, you know, platforms that help serve businesses and the way businesses can serve their sellers.
Will we ever get to fully no cash?
Yes.
And that's for anyone.
Yes, I see it.
Yeah. Okay.
I see it. No cash, no store, no branch, no human interaction. Yeah, we're gonna see a lot of that.
We want to keep some human interaction. I think we've all gone a little stir crazy at home.
Yeah.
And we have just a couple of minutes left. Any final words, from any of the panelists before we wrap up?
It's a great time. It's a great time for innovation. It's a great time for financial services to capitalize on opportunities like this. Certainly, we're going to see a whole new world, fully digital, different kind of trust models. A lot of analytics going to take place. Artificial intelligence is going to be a significant portion of how the enterprise is going to run, and identity. The scope of identity is going to grow, and you and I are going to run our own personal portable identities around, and we can interact, give consent, manage our data, manage our digital lives. I can see it also happening soon.
Yeah, I think for companies large and small, I mean, the pandemic has really accelerated digital transformation by months, if not years. And I agree, it's here to stay. I mean, it makes it so that it's faster and more convenient for people, and it can help alleviate a lot of the apprehension about hygiene and safety and just the pure adoption rate we saw early on, and how we've, relied on improvements like contactless payment or no touch order and delivery. I mean, I think it's super telling signs that, this type of commerce is here to stay.
Yeah, I think from my perspective, completely agree with what my panelists are saying, but my advice to, SMBs as well as folks in the audience is the way we approach our markets, the addressable markets has completely been changed with the rapid digitization that we have seen across the board. What we see is that the market that you thought you were addressing before has now expanded. So you leverage this rapid digital transformation as a moment of opportunity and also a moment to deliver efficiencies in the business. I think that's the two hooks that we should never lose sight of that this pandemic presents.
Okay, and with that, we'll have to call it an hour. I want to first thank Alfie and the team at Onfido for your continued support. So thank you. And thank you to the panel. Alfie, Swaroop, Jessica, Jerry, thank you for joining us. I thought it was a great conversation. And again, thank you to the audience, not only for joining us for another session, but for your participation during the panel. So we appreciate that. Enjoy the rest of your day, everyone. And we'll see you next time at LendIt Fintech. Thank you.
Thank you, Todd. Thank you, everybody. Cheers.